Good afternoon, this is Sean Golding with Golding & Golding, here to provide you with our annual update regarding the Streamlined Filing Compliance Procedures. The Streamlined Procedures have been around for close to 10 years, at least as a standalone program. It used to be a part of OVDP, but it's been a standalone program since about early to mid 2014. It's a great program. At our firm here, it's one of our specialties. We've done thousands of them at this point. And so we kind of just wanted to walk through and give you an idea of some of the basics, what to be aware of in 2023, 2024, assuming that the program continues, right? Because they can end it at any time. And because of all the bad information and misinformation online, I think it's important for taxpayers who are considering to do the program to have a baseline understanding of the basics. So the Streamlined Filing Compliance Procedures are a standalone program designed for non-willful taxpayers. There's no bright line test for non-willfulness. It's a totality of the circumstance, right? If you're non-willful and you have unreported foreign accounts, assets, investments, and income, then you may qualify for these procedures. There's two types of procedures under the Streamlined Filing Compliance Procedures. There's the Streamlined Domestic Offshore, Streamlined Foreign Offshore. Both of them are for offshore accounts, assets, and investments. Now, you see the term offshore, and some people understandably may think of, Malta or Nevis or a Cook's Trust or something. But in reality, it just means it's outside of the United States. Foreign, international, offshore, all kind of grouped together by the IRS for this purpose. Domestic just means you're a U.S. resident, you live in the U.S. Foreign means you qualify as a foreign resident, kind of a strict rule, 330-day test or substantial presence, depending on whether you're a citizen, permanent resident, or if you're a non-resident who meets the substantial presence test. 5% penalty for Streamlined Domestic, penalty waiver for Streamlined Foreign. Under Streamlined Domestic, you have to amend original returns that were essentially timely filed. Streamlined Foreign, you can file original returns. So there are various different types of accounts, assets, and investments that may be reportable. People just think FBAR and bank accounts. And for a lot of people, that's the majority of what needs to be done. But there's other flavors as well, right? You've got your typical bank accounts, savings accounts, checking accounts, current accounts, fixed deposits, depending on what country you're in, CD, current account. Then you have stock account, like a Vanguard or an Ameritrade equivalent. You've got mutual funds, investment funds, unit trusts, mutual funds, ETFs, CCOFs, things like that. Certain foreign life insurance that has a surrender or cash value, foreign pension plans. There was some inaccurate information back in the day where it made it sound like from the IRS, if you have foreign accounts in a pension, it's not reportable. What they meant was that if you have like an IRA or 401k and you've got foreign accounts in there, you don't have to parse out those accounts. But if you have a SIP or a super, CPF, EPF, MPF, those are all reportable. And then it gets more complicated, right? You have foreign corporations, other types of entities, foreign trusts. If you get a gift from a foreign person or an inheritance, trust distribution, that's all reportable. And there's lots of different forms. The FBAR is the most common, right? Foreign bank and financial account reporting. Form 8938 is for FATCA, which is the Foreign Account Tax Compliance Act. Form 3520 is for distributions of foreign gifts, inheritance, or trust distributions, different thresholds depending on whether it's a gift from an individual or an entity or trust distribution that has no threshold. They're all reportable. 3520A is for U.S. persons that own foreign trusts. 5471 is if there's foreign corporations, and then 8621 for PFICs. Some of the forms are easier than others, right? Excuse me. The FBAR and the 8938, for all intents and purposes, aren't that bad once you can kind of figure out which accounts have to be reported. It's basically just max value. Something like the 5471 can be very complicated when you have foreign corporations, and it's a category 1 or 5, for example, even 4 for controlled foreign corporations. And 8621 is for PFICs. That can get extremely complicated when you have excess distributions. Some common errors and mistakes that we find when people reach out to us. First things first, if someone's offering you like a 15-minute free consultation, you feel like you're being goaded into the program, you're being scared into believing that you have to do voluntary disclosure, or if you don't hurry up race in and sign that moment, only bad things are going to happen to you. Just take a step back and think, at any point in your life when you rushed into something, did it ever turn out good, right? You need to think about it. You need to understand it. You need to talk to different people. So just keep that fact in mind, right? Because some of these firms just offer these 15-minute, they say they're consultations, but they're just scare fests, right? Not everyone qualifies, okay? You have to be non-willful. So it's important to kind of go through the facts and circumstances and determine whether you're non-willful or not. Now, just because you learned about something after the fact, a lot of people have like 2020, they don't understand the 2020 hindsight thing, or, you know, they didn't have a crystal ball and they should have known. And, you know, it's easy to kind of kick yourself and think, oh, I should have known, I must be willful, but that's not always the case, okay? Just because you know about it later doesn't mean you absolutely should have known about it before. Not everyone falls into the reckless disregard and willful blindness scenario, which would kick you up to willfulness. It's also important, if you're doing streamlined domestic especially, that you exclude assets that aren't penalized. For example, real estate, unless it's within an entity, is typically not part of the penalty computation. RRSPs and other types of Canadian pensions, which are common, RIFs and RISPs, those are excluded from the penalty. They're still reportable, 8938 and FBAR, but they're not part of the penalty. There's no 3520 requirement under revenue procedure. I think it's 2014-55, and there's no longer an 8891 requirement. The IRS had done away with that. Another thing that's common is these ineffective statements that people write where they're like 25 or 30 pages long. These people at the IRS, they have jobs to do. They have a limited amount of time. It's got to be accurate, effective, and concise, and persuasive. You don't want to put things in there about that you're willful, but you're really super sorry, right? That is not non-willfulness. So it's important to really lock in an effective statement before you submit. Missing forms is common, realizing that there's different revenue procedures out there, and different people may have a different take on what needs to be reported. Some people may want to follow 3520, 3520A for certain foreign pension trusts type of accounts. Other people may want to rely on revenue procedure 2020-17, which is a bit ambiguous, but it excludes certain retirement and non-retirement deferred accounts. So, you know, it's just important that you lock in a strategy, that you're with a specialist, someone who's board certified, and that they explain to you why they're doing one scenario or another, so that you can think it through and decide if that's the scenario that you want. But different people may do it differently, and that's something to keep in mind. Streamlined is not the only way to do it. There are various other programs. It's typically referred to as offshore disclosure, offshore voluntary disclosure, but there was a specific OVDP program. They did away with that, and I believe it was September 2018. So now just the traditional VDP includes both domestic and offshore. There's the streamline we spoke about. There's alternatives if you're non-willful. Let me take a step back. If you're willful, you have to do VDP if you want to do anything. You can't do reasonable cause, streamlined, qualified amended returns, things like that. If you're non-willful and you don't want to do streamlined, you may qualify for the delinquent FBAR. You may qualify for the delinquent international information return submission procedures. Although in the former, there's still a penalty waiver. In the latter, they changed it in November 2020, so there's no automatically penalty waiver. And there's also the reasonable cause alternative. We have a ton of free information available on our main website and our sub-websites and our videos. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate to your matter, and it's something that we handle here. Again, my name is Sean Golden with Golding & Golding. Thank you for your time. Enjoy the rest of your day.